Hello everyone, in today's session we will be discussing 3 units, and those 3 units we will solve through one practical question. Okay, now first topic that we are going to discuss is recording of banking transactions. Now there will be some transactions in which our bank account will get included, and at that time how are we going to pass journal entry, we will see in this topic. Okay, now serial number 1, when cash is deposited into bank, that means we took out some cash from our business and we have deposited it into bank. In that case, since bank is the receiver of money, so we will debit bank account, and obviously cash is going out from our business, it is going out from our business and it is going into our bank account, so cash will be credited. In a similar manner, when we withdraw some cash from bank for business use, okay, so bank it is giving the cash and cash is coming inside the business, okay, consider it like that. Then in that case we will debit cash account and we will credit bank account. Then third point is when checks, drafts, etc. received from the customers are deposited into the bank on the same day. That means one of our customer, they gave us check, okay, and on the same date we deposited that check in our bank. So what we will do, what is going to happen is that instead of receiving cash in our hand, our bank account will receive money. So in that case we will write debit side bank account, we will debit bank account because bank is receiving the money, and according to personal accounts rule, debit the receiver. And we will credit customer's personal account, like if it is Mr. X who gave us check, then we will credit X account, so we will write to X. Okay, then in the fourth case, when checks, drafts, etc. we received from customer but we did not send it to the bank on same date. That means suppose today I received a check from my customer, one of my customer, and I kept it in my hand, I haven't deposited it into the bank today. So in that case, what entry we will pass is that we will write check in hand account debit. In that case, since check is still in our hand on that particular day, we will debit checks in hand account and we will credit the person who gave us that check. In for example Mr. X, we will credit X's account. Okay, then on the date when above checks, drafts, etc. are sent to the bank. Now in point number 4, we kept that check in our hand, we didn't send it to the bank. Okay, but when we will send that check into the bank on a particular date, suppose today I received that check but I deposited it tomorrow, then tomorrow's date I will pass one journal entry and I will debit bank account, because when I deposit that check into bank tomorrow, then my bank account will receive money, and I will credit checks in hand account because earlier when I received that check and I kept that check in my hand, I debited that account, but since check is going out from my hand, I am depositing it into bank, so I will credit that check in hand account. The next is when a customer directly deposits the amount in our bank account. Sometimes it happens is that when we sell goods, our customer, instead of giving us cash or check, they directly deposit it in our bank account. So at that time we will pass journal entry, we will debit bank account because bank is receiving the money, and we will credit customer's personal account. Suppose I'm running a business and I sold goods to Mr. A. Then Mr. A, what he did is that he deposited that amount into my bank account, so I will debit bank account and I will credit Mr. A's account. The next is when a check previously deposited into bank is dishonored. Sometimes happens is that when we deposit a check into the bank, sometimes due to some reasons the check gets dishonored. In that case, what we will do is that the journal entry that earlier we passed while depositing that check into the bank, we will reverse that transaction and we will pass journal entry. Okay, now see here in point number 3. Now when checks draft received from the bank, we received the check and we deposited it into the bank on the same date. Okay, now let's take example that the check that we received in point number 3 got dishonored. So in dishonoring, what we will do is that we will reverse this transaction. Earlier bank account was debited, now we will credit bank account, and earlier customer's personal account was credited, now we will debit customer's personal account. Okay, that means the journal entry will get reversed. You will understand better while solving a question. Okay, now point number 8, case A. When a check is received from a customer and discount is allowed to him. Okay, we received a check and we allowed some discount to a customer, and if the check is deposited into bank on the same day, means today I received a check and I allowed discount to one of my customer, and today itself I deposited that check into my bank. So the journal entry will be bank account debit, because my bank account will receive amount, then discount allowed. As we know that rule is we have to debit discount allowed, and the person who is giving us check will be credited because he is the giver. Okay, and in second case, case number B, is that in case the above check is dishonored, means see, if the check gets dishonored, then what we will do is that we will reverse previous transaction. Okay, now here we are talking about one particular check. Okay, we received, suppose, check number 1. Let's give this check a number. Check number 1 we received in case A, and we passed a journal entry. Then after 2 or 3 days, we were informed by the bank that the check that we have deposited, it got dishonored. So what we will do is that transaction related with check number 1 will get reversed. Okay, now see, earlier we credited customer's personal account. After dishonoring, we will debit his account. Then bank account was debited earlier, we will credit bank account, and discount allowed was debited, and now after dishonoring, that discount allowed account will get credited. Okay, you just have to reverse the transaction. There is nothing to go into deep. Okay, you just keep that in mind. If the check gets dishonored, then we have to reverse the journal entry. Then next is when payment is made by issue of a check. Suppose when we want to pay any amount or we have to make payment for any expenses, and instead of paying cash, we have issued a check. In that case, suppose we paid 10,000, we issued a check of rupees 10,000 to Mr. A. In that case, Mr. A, since he is the receiver of that check, his account will be debited, and since we issued check, that means money will get deducted from our bank account. So in that case, we will credit bank's account because our bank is giving the money, and according to personal accounts rule, that credit the giver. Okay, now next, when expenses are paid by issue of a check. Now when we make any expenditure, suppose we paid rent through check. Okay, so in that case, we will write expenses name here. Suppose like in my example, I told you that I paid rent through check, so I will debit rent account and I will credit bank account, since amount will be credited from my amount will be deducted from my bank account. Now next point is when cash is withdrawn from bank for personal use of the proprietor. And we know that if a proprietor takes out any cash from the business for his own personal use, that will be treated as drawing. So if he withdraws from bank also for his personal use, we will debit drawings account, but instead of crediting cash account, this time we will credit bank account because he is taking out money from bank account. Okay, so these were some transactions related with bank. Okay, now there are 3 more transactions you will find in another page of your book. Those are related with interest allowed or interest charged or bank charges by bank, that we will see through a practical question. Now the question that I have taken, the next topic that we are going to discuss is opening entry. Now sometimes firms, they start new books in the beginning of each year. Not sometimes, means every year a firm starts their book at the starting of each financial year, that is 1st of April. Now, since the closing balances of last year have to be carried forward to the next year, the first entry in each year's journal will be to record the previous year's closing balances. Means since we are going to start new books from at the starting of new financial year, that means still last year some closing balances will be there, so we have to bring those amounts into our new books. So in that case, what we will do is that we will pass opening entry in our journal. Now for passing this opening entry, what you have to do is that in question they will give you some value of assets. Like in this example, they have given some value of assets like cash 8,000, bank balance 20,000, stock 54,000, debtors including Ashok, Pawan, Vivek, then machinery. These are all your assets, and there are some liabilities as well, like creditors, Chamanlal, Ompal, capital, etc. Okay, now what we will do is that all the assets account like cash, bank, stock, Ashok, Pawan, Vivek, machinery account, all these assets will be written on debit side. We will write on debit column. Okay, then all the liabilities like creditors and capital, like Chamanlal to Ompal to capital account, we will write on the credit side. Okay, now after writing all the assets and liabilities given in question in our journal, what we will do is that we will find out total of this debit amount and total of this credit amount. Now see, after this goodwill, we got assets still here. Okay, remember that we have assets still machinery from our question. Okay, now after writing till machinery, what you will do is that you will find out total of this debit column as well as credit column. Now in some cases what happens is that asset side is lesser than credit liability side. Okay, suppose in this question, let's say example that we got asset side as 2 lakh rupees. Okay, 2 lakh total. Then credit side we got 3 lakh. Okay, this is example only I'm taking. Asset side we got 2 lakh and liability side we got 3 lakh. Clearly asset side is lesser than liability, so in order to match these two, we will find out the difference is 1 lakh, and that 1 lakh we will write in asset side as goodwill account. That is why it is written as balancing figure. That means since this asset side was less than 31,000 from liability side, that's why in order to match both this debit and credit side, we got 31,000 difference, and that we will write as goodwill. Okay, because assets side is less than credit side. But in some cases what happens is that asset side is higher or more than liability side. In that case, in order to equate both debit and credit side, we will write the balancing figure on liability side. Okay, by writing 2 capital. If asset is less, then we will write goodwill account. If liability is less, then we will write 2 capital account. Here you can see here, if the balance of capital account is not given in the question, it will be found out by deducting the total liabilities from that of total assets, because in some cases we will not be given capital account. In that case, surely the liability side will be less, and we will write capital account on credit side by writing the amount which is by the amount which is lesser from assets. Okay, but on the contrary, if the total liabilities exceeds, means if it is greater or more than total assets, then the difference will be treated as amount of goodwill, and the same will be debited in the opening entry. If asset is less, then we will write goodwill account, and if liability is less, then we will write capital account. This is opening entry. Now the third point that we are going to discuss today is bad debts. Now sometimes when the goods are sold to a customer on credit, and if the amount becomes irrecoverable due to his insolvency, means Suppose Mr. A bought goods from us on credit. Now after some time, when he is supposed to pay us money, he becomes insolvent, means he doesn't have that amount of money to pay us. That is known as insolvent. Now what we will do is that amount not recovered is known as bad debts. Instead of, suppose, let's take example that we sold goods worth rupees 2 lakh to him, and now when the time of payment came up, he has only rupees 1 lakh. Okay, so the remaining money that we are not going to recover from him will be known as bad debts. So bad, for that also we will record in journal how cash account will be debited, because in this example, Ravi, he was supposed to pay us 10,000 and he was declared insolvent, but still he said that out of 1 rupee he will give 30 paise. So we have to find out how much he will pay us for a total of 10,000. So cash account debit, that means that we are going to recover from him, that is 30 paise in a rupee. So to find out that amount, you have to do 30 by 100 into 10,000. So we got 3,000. Then the amount which he is not going to pay us will be known as bad debts. So we will debit bad debts account by rupees 7,000, and altogether Ravi was supposed to pay us 10,000. His account will be credited. Now this is the journal transaction of bad debts. Now let us see one question. The question that I have picked is question number 14A from your practical question. Now some assets and liabilities are given in your question. Okay, on assets side we have cash at bank, stock, debtors, then furniture, building, and on liability side we have 2 creditors, that is Mr. X and Mr. Y. Now let us see the solution. Now at first, since we have assets and liabilities given in the question, we have to pass journal entry for opening entry. Okay, so what I did is that we will write all the assets, okay, like cash at bank, stock. So here cash account, bank account, stock account. Then debtors we will write separately, Mohan, Sohan, Dinesh. Okay, then furniture account and building account. We wrote all those amounts on debit side. Then for liabilities, Mr. X and Mr. Y we will write on liability side. Since after writing all those things, when we see the total of debit and credit, we will find out that liabilities is less than the debit side, that is asset. So the difference is 1 lakh. Okay, so that will be our to capital account in bracket balancing figure. Now I wrote that balancing figure for your reference, but in exam you can just skip this balancing figure. Then next transaction is received a draft from Mohan in full settlement. Now when you see this full settlement, that means there is some due that he was supposed to pay us. Now when we check in our asset side, that means he was supposed to pay us 10,000, but instead of that, what he did is that he gave us a check of rupees 9,750, and we deposited that check into bank on that particular same date, that is on date 3. So we have to find out how much amount of discount was there, and that discount will be known as discount allowed. Okay, now the sorry, I skipped one transaction. Transaction number that took place on April 2. Bought goods of the least price of 6,000 from Khanna Brothers, less 15% trade discount and 2% cash discount, and paid 40% price at the same time. Since we have already done this type of transaction in one of our previous sessions, so we will see the working note. List price was rupees 6,000. Then from there we will deduct trade discount of 15%, that is 900. Then 5,100 is our total purchase. Then that we will divide into 2 parts, that is cash transaction was 40%, since 40% of the amount was paid immediately. So 40% of 5,100 is 2,040. Then on that 2,040 we have to give cash discount of 2%. Then 2% of 2,040 is rupees 40.8. okay, so we can, since we cannot take we cannot take amount in decimal, so we took 41 instead of 40.8. That 41 will be our discount received. Then after deducting, actual amount that we paid is rupees 1999, and the remaining 60% will be cash credit transaction of rupees 3060. Now the entry will be purchases account debit to cash account, since we received the amount in cash. Okay, so we will write to cash account to discount received to Khanna Brothers. Now cash account, we actually received, we paid cash 1999, discount received was 41, and the remaining 60% was 3060. Okay, now the next transaction, received a draft from Mohan in full settlement. As I already told you, we were supposed to receive 10,000 from him, but he paid us only 9,750. That means 250 was discount allowed. So since he paid us check and that check was deposited into the bank on the same date, so amount will be given, we will receive amount in our bank account. So we debited bank account, then discount allowed to Mohan, since he is the giver of the money. So he was supposed to pay us 10,000, and in bank exact amount we received 9,750, and discount allowed was 250. Okay, now let us see next transaction. Purchase goods from Suresh of the list price 8,000 at 20% trade discount and paid him by check. That means we purchased goods from him and we made the payment through check. So entry will be, we purchase goods, so purchases account will be debited, and since we made the payment by check, that means amount will be deducted from our bank, so we will credit bank account. And list price was 8,000, but there was trade discount of 20%, so 20% of 8,000 is 1,600. So after deducting, we got amount of 6,400. Then next, on date 8, sold goods and received a check 25,000. So what we will do, when you see the transaction on date 8, that means we received a check. They haven't mentioned whether we deposited that check on that particular date or not. So when you see the next transaction, deposited the above check, that means we are talking about this check only. Okay, so on date 8, that check is still in our hand, we haven't deposited it into bank, so we will write check in hand because we received check in our hand, and sales account will be credited rupees 25,000. Then on April 10, since they said that we deposited that above check into the bank, so that means when we deposit that check into bank, we will receive amount in our bank account. So bank account will be debited and check in hand will be credited by same amount, 25,000. Then next is Sohan deposited in our bank account. Now who is this Sohan? Okay, and see, he is one of our debtor. He deposited directly into our bank. That means rupees 4,000 was deposited into our bank by him. So bank is the receiver of money and Sohan is the giver. So we will debit bank account and we will credit Sohan account by 4,000. Okay. Then next, paid income tax by check. Now this income tax, it is treated as personal expense of the proprietor. So we will treat it as drawings. Okay. So drawings account debit 5,600, and in the question they clearly mentioned that the payment was made by check. So money will be deducted from our bank account, so we have to credit bank account. Okay. The next transaction is received a check from Sohan and sent to bank and discount allowed. So we received a check from Sohan of rupees 7,800 and we allowed him discount worth rupees 200. So internal transaction, what we will do is that since we received check from him, money will be deposited into our bank directly. So that 7,800 we will receive in our bank account, and discount allowed is credited, debited. So 200 will be written in the debit side, and who the giver is Sohan, so his account will be credited by 8,000. The next transaction, withdrew from bank. Now for office use we withdrew 2,000, but for private use that will be treated as drawings, withdrew 4,000. So cash account, since we we drew that for our business purpose, so this cash will be kept in the business. So that means cash is coming inside our business, and the remaining for private use will be treated as drawings for 1000. So altogether we took out 6000 from our bank account, so bank account will be credited by 6000 of amount. Then in next transaction, sent a check to X in full settlement of his account. That means we sent him a check in full settlement of his account of rupees 4900. When they say full settlement, we have to check how much we were supposed to pay him. Okay, now when you see in the liability side, you can see that X is our creditor and we owed him 5000, but instead of sending him 5000, we paid him only 4900 through a check. Okay, that means 100 rupees was discount received. So what we will do is that X, he is the receiver, bank, since we are giving check, so we will credit bank account, and discount received is also credited. Now since we have two accounts on credit side, first we will see on the credit side. Bank, we issued a check worth rupees 4900, so we will write in bank column. Then discount received was clearly 100 rupees, and altogether we were supposed to pay him 5000. Okay, then next transaction, check of Sohan returned by the bank is as dishonored. Now the check that we had received from Sohan earlier was given to us by the bank saying that it was dishonored, so we have to refer on which date we made that entry in our journal. So when we look into the previous transactions, we will see that this on April 20, the check that we received, we received that check on April 20 and we deposited it on that date. So on dishonoring, what we'll do is that we will simply reverse this transaction. Earlier bank account was debited, discount allowed was debited, and Sohan's account was credited. Now when the check was dishonored, what we will do is that instead, earlier Sohan's account was credited, now we will debit Sohan's account. Bank account was debited earlier, we will credit bank account, and discount allowed account also will be credited. Amount will be same. See, bank account was debited by 7800, discount allowed was 200, and altogether Sohan account was 8000. So while passing entry for dishonored also, we will do the same. Sohan's account will be debited by 8000, bank account and the discount allowed account will be credited by the same account. Now on 28, Dinesh was declared insolvent. Now who is this Dinesh? When we see in our question, Dinesh is one of our debtor. He owes us 14,000. He had to pay us 14,000, but he was declared as insolvent, and he said that 60 paise in a rupee, means on 1 rupees he will pay us only 60 paise from him by a check. That means we will receive amount in check. Okay, so first we have to find out how much amount of money we will receive from him. So to calculate that, you have to do is 60 divided by 100, because 1 rupee is equal to 100 paise. Okay, so 60 divided by 100 into how much he owed us, 14,000. So that will give us amount which he will give to us. Since he is making payment through check, so we will debit bank account, because amount will be, we will receive the amount through our bank account. So amount we will receive is 8,400, and out of that 14,000, remaining amount will be our bad debts, that is 5,600. Altogether Dinesh was supposed to pay us 14,000. Okay, now on then next transaction, bank allowed interest. That means bank, they gave us interest, since it is an income for us, and when bank they give us interest, they directly deposit it into our bank account, so our bank is receiving that amount. Okay, so bank account will be debited and interest received account will be credited. Since interest received account is a nominal account, and according to nominal accounts rule, credit all gain or income or gain. Okay, so next, since there are two similar transactions, that is paid for rent by check and paid for traveling expenses by check, we will merge these two transactions and we will put one journal entry. Okay, compound journal entry. Now these two transaction, what they said is that we paid rent and traveling expenses by check. That means money will be deducted from our bank account. So rent account, since these two are nominal accounts, and we will debit rent and traveling expenses account, and bank account will be credited since money will be deducted from our bank. Okay, so this was question number 14a. I hope that you have understood this question, and since it is a little bit lengthy question and it includes all the three topics that we have, new topics that we have discussed today, so you go through the question over and over again and see if there is still any confusion, and if not, then you can practice question number 14b. Okay, for this session we will wind up here. Thank you.